The other topic that jumps to mind when we're talking about maturity in the fintech market is definitely the wealth tech. And wealth tech is the topic of our next keynote speaker who flew in here from Spain, Elliott Locke. And he's going to tell us about the wealth tech trends in the post-pandemic Spain. Is Spain a new innovation leader in the EU? Fun fact about Elliott, he can't operate without at least 2 or 3 coffees on him. Since it's afternoon, I hope you fully caffeinated.
I've had many coffees, so
awesome.
I'm good. If I'm a little bit jittery, it's the coffee, not the nerves, so excellent. And thank you very much for that very warm introduction. So far, this has been an amazing conference. I'm honored and thrilled to be here, listening to some of the other talks. I hope that what I'm about to talk about here lives up to the standard that's been set. So yes, my name's Elliott. I'm the co-founder and CEO of a wealth tech based in Spain. We're a wealth building platform for people living abroad to help expats and remote workers make, manage, and find investments that work for them. But outside of that little pitch, I'm not really here to talk about my own startup. Even as a founder, I could go on for hours. Rather, I want to talk about the experience and what I've learned in Spain, having lived there for 6 years, worked almost exclusively in the fintech and wealth tech space, and been very connected into that startup scene. And before we go into the startup scene in fintech and wealth tech, I think it will help us to take a little bit of a brief history lesson about where Spain has been, and we can get an idea of not only the culture behind wealth and investing, but the trend line that should continue over the next years. So I'd imagine that many of you are aware that Spain, for the better part of the 20th century, was under a dictatorship. During those 40 years, the country was effectively cut off from its peers in Western Europe, meaning they were excluded from the economic growth that benefited their neighbors such as France, Italy, Germany, the UK, and others. Yet, by the mid-1970s, the dictatorship fell, and in its place came a new democracy, which entered into an era of unparalleled economic growth. In fact, between 1978, the first year of the democracy, and 2007, at the eve of the financial crisis, the Spanish economy grew at 300%, accelerated by no small fact that they entered into the European community and then the EU starting in 1986. This was a phenomenal turnaround for a country that did not have the economic resources and community to have the type of growth and standards of living that others did. And in this time, millions got lifted out of poverty, joined the middle class, and by the time the financial crisis hit, they were up there with their peers in the standard of living. And yet, like any other country, Spain wasn't immune to the global financial crisis. In fact, they were hit particularly hard because, like the United States, Spain's economy was over-focused on real estate. And in fact, the reason for this concentration goes down to the core of Spanish investing culture, which starts with home ownership. And while that's important in many other countries, it's particularly key in Spain. In fact, even right now, Spain has one of the highest home ownership rates in the world at just under 78%. So when the financial crisis hit and the real estate market fell apart, it ushered in 3 years of pain. There was a tidal wave of foreclosures. Banks fell like dominoes. And the European Union, along with the international investment community, had to come in and bail the economy out. But as part of those terms of the bailout, the country had to enter into some very serious austerity measures involving reforming some of the leftovers from not only the dictatorship, but some of the relics of the 20th century economy. And while these were deeply painful to Spanish investors, retailers, and the economy as a whole, it created this new moment that gave birth to a new startup hub in Southern Europe. Starting in 2012, as the economy began to recover, Spain, without its traditional economic model that had almost collapsed entirely in the previous business cycle, started to innovate. And thanks to the fact that there just wasn't much for the young people to go into other than to start startups and these new reforms, Spain began to take off as a startup hub. By last year, the entire valuation of the startup community in Spain was worth 46 billion euros. Right now, there are over 7,000 Spanish startups active in the market, led by the two polar capitals, Madrid and Barcelona. And if any of you are football fans, you know what the competition between those two cities are like. I can promise you it extends to the startup scene. Those two cities are actually always in the top 10 in Europe when it comes to startup hubs. And in fact, Barcelona is consistently in the top 5, only behind the powerhouses of London, Paris, and Berlin, and vying for that 4th and 5th place with Amsterdam and Dublin. The scene is incredibly fun to be in. Barcelona has a tech district that is almost second to none on the continent. And despite all of these wonderful changes and progress, it's not finished. Just last month, the government passed the new startup law. This law came out of a collaboration between the government and the ecosystem to try to improve upon those first reforms that were made out of austerity a bit over 10 years ago. While there are many points that are worth mentioning on this law, I think the ones to really keep in mind are the following. So first, Spain has made it much easier to start a company. Prior to this reform, you need around 1 month time visiting various different offices and 3,000 euros capital in a bank account just to get the legal entity formed, usually a limited company, to come to market. With this law, the process is supposed to be improved to take just 6 hours, done all online, and with a capital requirement of a token €1. This movement was made to make it easier for innovators to quickly get the protection of a legal entity and come to market and test their idea without dealing with bureaucratic process. Second, Spain is one of the first countries in Europe to create an employee stock options plan. This has long been a complaint of many startups across the continent, and we know why. As startup founders, we know it's incredibly difficult to attract the key talent that we need to bring our startups to the next level, at least on a cash-per-cash basis. In the United States, giving this sort of remuneration to employees in terms of stock options not only brings in the talent you want, but incentivizes them to grow your company into what you want it to be. Now, with the new employee stock options rule, Spain can better compete globally, fighting off some brain drain, and to make the startup scene even more competitive. Finally, Spain decided that they would increase the tax deduction that angel investors could receive for investing in startups from 60,000 euros to 100,000 euros. This means that they have unlocked more capital to go at the very earliest and critical stages for startup investment. Indeed, if they want to seed that ecosystem to keep it going, this rule should make it much more attractive for investors to take the risk necessary to grow the next innovators of tomorrow. Now, that's what's been happening in the startup scene. So what about what's happening with fintech, and by extension, WealthTech in Spain? Well, it's been running in more or less the same parallel as the current startup scene in Spain. Prior to the financial crisis, there were 1 or 2 sort of novel fintechs in the space. Flywire was probably the biggest one to come out of that era, who has done, in the payment space, they've done incredibly well. But really, at that time, there just wasn't the innovation framework and culture, and probably more broadly, the technology just wasn't there. It's really hard to imagine Web 2.0 only came out 10, 12 years ago, and APIs just weren't a thing at that time. But like the rest of the startup scene, the fintech scene began to take off in earnest in 2012. Again, at the time, there wasn't so much of the talent pool, and like anything in our industry, we move just a bit slower than others in sectors like ed tech or e-commerce that don't have the regulatory issues we face. Yet, by 2015, the companies that had already established themselves prior had inspired a new generation of homegrown Spanish innovators to start opening up fintechs. And indeed, over the next 4 years, there's 3 times growth in the Spanish fintech scene in terms of new entrants into market locally on the scene. If you want to break down the Spanish fintech sector, you can look at it through a few different verticals. Open banking is one of the big drivers down there, as well as payments and lending. And lending, despite the financial crisis that was driven by a real estate and mortgage crisis, is still a big industry in Spain. You have a few neobanks, and also you have us in the wealth tech industry. And on that, the wealth tech sector is quite fascinating, because for a country that is of only 47 million people, it's a very competitive B2C market. There are right now 8 different robo-advisors, a handful of different personal financial managers. Very often we're seeing new entrants into the algorithmic and active trading space, including companies who are building the neo-broker apps similar to Bucks, Trade Republic, Robinhood in the US, although not quite to that craziness, as well as firms that are supporting the open wealth movement. And yet, despite this being such a competitive area, we're seeing the realignment between some of these B2C companies into the B2B space. It's no secret that banks in Spain aren't the best at innovating. Maybe that's the case all over, but usually what happens when a bank wants to go into the fintech space in Spain, they'll do one of 2 things. They'll either come up with an idea themselves, run it through a very bureaucratic process where the approvals and the development cycle are probably about the farthest from lean as you can get, or they're going to go out and buy some very early stage technology. With that early stage tech, they're going to, again, run it through that process, and by the time they bring it to market, well, the technology or the demand or the need has moved on, and it kind of goes to waste. So they've come to the point where they've realized that if we can partner with specialists in the wealth tech space, then we can provide a better value-added service on a part of our business, wealth building, that we've been traditionally weak at. For that, we're seeing some interesting stuff. One of the big personal financial management tools is partnering exclusively with banks to help them provide the sort of smart savings plans and automated savings tools that customers really demand, or that we see coming out of a lot of neobanks, sort of their bread and butter product, to add that functionality into their stack without going through the direct approval process of building it in-house. Additionally, there's another robo-advisor who shifted to only B2B to C. And their mission is to help banks where they have outsized deposit accounts. Again, in Spain, there's a strong savings culture as it leads into buying real estate. So there's an excess amount of deposits, and this company is helping banks to sweep those deposits with the client's consent into investment products to grow their wealth and hopefully beat inflation. These trends we think are going to continue. And again, if you break it down into the different sectors, the homegrown fintechs in Spain, the robo-advice market is the most competitive. The first robo-advisor who entered into Spain even turned a profit for the first time last year. So despite it being a competitive space, there is a lot of opportunity to grow. Now, that brings us up to today. So what does the future of the Spanish wealth tech scene look like? I've thought about this a lot, right? And it's a very new market, a very new and niche space. And I found these trends that are the ones that stick out to me the most. So first, we want to look at the practical impact of the startup law. Now, the law is just only came into the books last month, and we haven't yet seen it put into play. But I think this law can transform the Spanish wealth tech scene in ways that other laws haven't been able to get it over that finish line. First, the employee stock option plan is going to help to attract the wealth tech talent that the industry needs to grow. Spain, for all of its wonderful startup scene and its innovator mentality, just has not had a traditionally strong wealth tech and investing culture. That means that the talented individuals, the one with the knowledge of not only just the tech, but the regulations and the investment methodology, aren't quite there. With employee stock options, us in the wealth tech space can quickly attract, or at least better attract, the sort of talent from abroad who can help us build the products that we need to be able to succeed and be able to reach our audience in a much more better and believable fashion. Second, and maybe even more importantly, is that the new increase of the tax credit available to angel investors should help put capital into this industry at the early stage. Again, it's no secret for us here in wealth tech and in fintech that the costs of us getting to market, the cost of doing business is high. We have regulatory and compliance costs just to be able to offer a testing product that's live on the market that no other industry faces. For an investor, with all euros being equal, they're going to see a faster return, or at least a quicker time frame to revenue in any other industry than going into wealth tech. Yet, by giving them an extra 40,000 euros to pool their money with other angel investors or to take that lead on their own, it has increased the possibilities that they're going to put money in at the early stage where it can make the most difference and can have the most impact. Again, it's too early to say how this will play out, but there is an increasing amount of interest in this scene as the fintech community as a whole is growing, and the wealth tech scene is right behind it. On that, though, we want to look at how the regulatory space evolves. Spain, for all the progress it's made, is still a two-track economy. On the one hand, you have all of these innovators, these individuals who aren't afraid to push the boundaries, these people who are thinking globally, who are thinking tomorrow. And it's super inspiring. You go into the community, you go to meetups, you talk, and it's wow. I'm originally from the US, and I get this sort of Silicon Valley feel about it. Incredible. And yet, on the other hand, Spain, despite all of this progress, still is a deeply conservative and traditional place. And when it comes to going to market, and when it comes to testing new ideas, the regulatory space there could be a little bit more responsive. And obviously, this isn't an issue just for Spain, right? In the EU, we have 27 different markets regulators. There's 27 different ways to go to market. Yet, what we're witnessing is that innovators aren't afraid to look across borders for their regulatory needs. Because after all, if we go out and we raise capital, we convince investors to give us a huge ticket relative to any other startup, we want to deliver that as fast as possible. And depending on how the regulatory scene evolves in Spain will depend on how companies there, wealth tech companies, structure themselves. Could it be that they do everything in-house there? Or do they look elsewhere for those regulatory needs? And to their credit, and kind of to step back for a second, in Spain, the way that they've implemented regulations is through two different authorities. Anything banking-related PSD2 is done by Banco de España, the national bank, and anything related to MiFID II and investing and the other investing vehicles, it goes through the National Securities Market Commission. To the National Securities Markets Commission, they've created a fintech desk that enables innovators to quickly bounce off an idea with them, and they'll tell you, while not in a formal opinion, yes, this can work, or no, if you do this, you're going to go to jail. So they are there to provide a sort of guidance, and they're very responsive in that sense. That being said, there's obviously room for improvement there in the whole process of how it gets, you get a regulation to market. Watching this is going to be equally crucial because now there's a huge gold rush here in the EU to replace London as the fintech capital of the EU. London, for the longest time, was the disputed leader in EU fintech. The financial talent there, the scene, the ecosystem, is still second to none. And yet, because the Brexit exit agreement focused more on fisheries than on finance, UK-based companies lost the ability to operate seamlessly within Europe. And European companies wanting to target a very developed and a very active market and responsive market towards wealth management products have lost that common ability to passport. In the aftermath, countries are now competing with each other to see who can take over from London, at least in the EU space. Spain, in a lot of ways, is in a good position to do so. The country has a €1 trillion economy. They have a giant talent pool, 47 million people, and tons of sunshine. Although I don't think I'm supposed to talk about that here. Right. Right. Yeah. So to see how Spain can position itself in terms of regulated investment finance versus its 26 peers will determine how much of that market share they can grab, while firms who are still innovating in the UK look for a European footprint, and European firms look for the most competitive space and effective place to open up their regulated business. Spain, though, also has a hidden ace card that almost no other country in Europe has, with the exception of maybe France in the EU and to a larger extent the UK, and that is Latin America. Despite the fact that Spain cut the formal links with its colonies hundreds of years ago, there are still deep cultural ties, still the common language and a common way of doing business in ways that don't exist in other countries. This enormous and one of the fastest growing markets presents a gateway for Spain between a developing world and the developed world. In fact, already in other sectors, many companies will set up in Spain as their EU base to target different countries in Latin America. Likewise, Latin American companies, both of startups and established ones, will use Spain as their entry into Europe. Now, the fintech scene has recognized this, and with these common ties, these common languages, and even a common-based legal system, many Spanish innovators in the fintech space have already entered into the Latin American market. Open banking and payments in particular see a giant opportunity, and some of the biggest names in Spanish fintech are operating in the more developed markets of Mexico, Chile, and Colombia. In terms of wealth, it's interesting to see how this will play out. On the one hand, there isn't anything like MiFID II in Latin America. Now, as the continent looks to become more unified economically, that could emerge in the next 10 years. I imagine that could be a bit of a hot take, but we could see it happening. If that was to take place, Spanish wealth tech firms, who again understand the pain points and the cultural nuances of the marketing side of it, could very quickly enter into a 400 million person market and grow well beyond the 47 million that are sitting back home. Likewise, wealth techs in Latin America could do the same, but in reverse. Again, with these common cultural ties, but innovating even faster because they can sort of leapfrog through via tech into this very modern fintech wealth tech way of thinking and get into Spain and by extension the EU. By facilitating these trades and making these links stronger and deeper, Spain could be in an excellent position to punch above its weight in the wealth tech space. Now, of course, to get there, there needs to be some more support and incubation of wealth tech startups. And it's not to say that that doesn't exist. There's already startup venture builders in the market who help bring startups from idea onto the market very quickly with all the support to do it. Some of the better ones have been doing this in the fintech space already and are now foraying into the wealth tech space. Additionally, we have the Spanish Fintech and InsurTech Association, who's representing us in front of the regulatory bodies, in front of the banks, in front of the industry, to be our voice. What's more is that now we have the first fintech-focused incubation and acceleration program in Spain. The SIX Group in Switzerland, the company in charge of payments and securities clearing, spun off in 2015 their F10 Fintech Incubation and Acceleration Program to help the Swiss fintech scene connect and innovate faster. After some success in Switzerland, they extended it to Singapore. And in 2020, the SIX Group acquired the Spanish stock exchange company. As part of that deal, SIX decided that they were going to bring F10 to Spain. And last year, they had their inaugural batch of their incubation program in Spain. For the record, my startup went through it, but it was a phenomenal experience in the fact that before this program came about, there wasn't really this support of the wealth tech ecosystem. And all of a sudden, we were able to put together the network of the different players who were spread out across the country into one common area, enabling us to share our own concerns, our own thoughts, our own inspirations, and build the sort of network that Spain needs to improve and ameliorate its wealth tech space. Of course, trust is the key for any wealth tech. And if Spain is going to have any success in this arena, it's going to have to overcome the trust barrier. Everyone in finance, everyone in fintech, everyone in wealth tech, we know, particularly when we're talking on the B2C space, the biggest barrier to getting people to convert and become users is to getting them to trust us with our money. It's a hard sell. Wealth tech, it's even harder because unlike with neobanking and payments, we're building a long-term relationship. And we're not asking clients to leave a couple €100 of deposits on their account. We're asking them to trust us with their life savings. That's already hard enough as it is in general. In Spain, when we go back and we look at the wounds that run deep from the financial crisis, that barrier is even higher. Because at that time, the banks and the consumers were acting irresponsibly. Banks were lending money to people on terms to people who had no business borrowing that amount. Consumers were buying houses that they had no business owning. And if that wasn't worse, the banks were also packaging up these mortgages and other toxic structured products and selling those as pension products to the investors there, to the retail market. And when all of that came crashing down, people were hurt. There is still deep distrust today. You walk around Barcelona, and you'll see stickers put up saying how the banks are evil. And we're in a fintech community, so there may be some truth to that. But you'll see the stuff about how banks are evil, how finance is evil, how we should get rid of all private financial institutions, and it's an incredibly polarized sector. And it's up to us in the Spanish wealth tech space to convince the consumers there that we can be trusted. While we're not going to do shady stuff like the banks who have burned you, we're also legitimate. We're not trying to scam you. And it's a problem that we all have to figure out how to solve. I'm a huge fan of marketing. I worked a lot in the fintech marketing space, and I believe that is how we're going to get there, is by just drilling down and being niche and owning that space, owning that audience. However, I only speak for my company, although I know that this is an issue that Spain and the other wealth techs are aware of. If they can match all of these goals or even exceed it, and the community can do what it takes, Spain has a very bright future as a wealth tech. And not only that, but the ability to continue to grow the powerhouse in Southern Europe could be one of the biggest stories coming out of the tech scene in the next decade, but if they can pull it off. Thank you.
Bravo.
Thanks.
Very nice. Is the first time you're here in Lithuania?
It is. First time in the Baltics.
But for sure you have done some research, right, before coming here, or didn't you?
I did. I spent a lot of time on the internet.
Good, because I have a question.
Tell me.
So, for sure you have done some research, right? Or you already know a little bit about the ecosystem. So, what insights do you would bring about our fintech ecosystem, or even about the wealth tech?
Here in
Lithuania. Yes.
Here in Lithuania.
You told a lot about Spain, so we'd love to know something about Lithuania.
Well, okay, to be quite honest, first, I've been here a little bit over 36 hours. Yeah. It's been an incredible experience. I'm blown away by what you're doing here in ROCKIT. I think there's the idea to do something similar in Spain through F10 and the stock exchange company. But what's been fascinating for me about fintech here is Lithuania has this sort of, it's a bit of an enigma outside of this corner of Europe, right? And people sort of associate it with, I wouldn't say Cyprus, because you don't want to be Cyprus, but that like, it's just like this neo-banking payment area that not many people understand. But then when I come here and again researching into this and talking to people, it seems like it's not that at all. It's an ecosystem that knows that it needs to support itself, and that everyone in this community knows that working together is going to help the country punch way above its weight in the fintech space. And especially, I think that the Lithuanian fintech scene has realized that the power of the EU, the common market, and maybe this is the American in me talking, but the fact that it's competitive, it's flat, and if you play it right and you're effective, you can go very far. And that's been really exciting to see.
So do we have chances in WealthTech to promote it and to make it big in Lithuania, in your opinion?
I think there's a lot of opportunity for wealth tech firms. And again, I think what will happen right now in sort of the future of wealth tech is, we're going into WealthTech 2.0. 1.0 was the original robo-advisors who had to register as brokerages, the guys who had to set all of this stuff up on their own, who had to go out and get the banking license. Well, now we have brokerages as a service, which are API-only brokerages. And you have the same thing. It's pretty much PSD, well, not really PSD2, but it's open banking, but for wealth. And now in 2.0, you're going to have the innovators who can build on top of these API rails, who are going to be looking at this experience and building out this UX, but we'll also need to have that compliance support, that regulatory support. And I think here there's probably a good opportunity for that.
So talking globally, what is the next big thing in the WealthTech?
Oh, abroad in, of course. The next big thing in the wealth tech. I really think it's going to be the customization of it, the niche part of it. Again, at least in the B2C space, we're going to have to see innovators looking about how they can talk to their audience. What's the fastest way to convert these users and to get them to trust you with your money?
So next question is actually about that. How wealthy customers community shall be adopt WealthTech solutions? Is WealthTech only for the wealthy people in Spain or Lithuania?
It shouldn't be. WealthTech should be for everything. And I think, and again, I've lived in Europe 20 years, but I still have my American roots. And in the United States, we have we might not be able to take care of our citizens, but damn, can we build money and build wealth, right? And it's very accessible, right? Like what's always strikes me when I go back, there's like literally a registered investment advisor on every corner, right? And that makes it, possible for people to get advice and to grow their wealth. I think probably what needs to happen is wealth tech firms need to start mass marketing to the retail investors. The wealth tech firms that have been successful in Spain, they focused on a very specific subset of the market, right? The highly educated, who are highly professional, who have a lot of cash to invest. That's cool, especially on the AUM model, but that doesn't help everyone. And if we want to look at sort of an arc of a pipeline, you can't just start out wealthy. Most people don't start out wealthy. Very few people have that privilege. And it's up to us to continue growing that and to say like, okay, well, these people might not, our users might not have a lot of money now. Give us 10, 15 years, and they are going to be wealthier. And we can coach them in different ways to make sure that, they are growing their wealth. They're in a great spot financially. But I definitely think we need to figure out how to reach the masses in that and say, yeah, it's not just for wealthy.
Yeah, of course. Just right before your keynote, we were talking about the wealth tech startups and crowdfunding platforms. And here we have a question about the possible partnership, and is it anywhere a possibility to work with the wealth tech startups and investment platforms in Lithuania? Where do you see the...
Again, I think it's also very interesting to think beyond just, siloed wealth management. Again, going back to this way of like WealthTech 1.0, WealthTech 2.0, where WealthTech 1.0 was built on top of the actual regulated infrastructure and is very focused on one financial product. Wealth 2.0, which is building on top of platforms, can take advantage of these different API rails, right? And you could very easily well, I wouldn't say easy, because there's nothing easy in development, as my CTO keeps telling me. But you can take these different verticals in the wealth space, crowd lending, crowdfunding, cryptos if you're feeling adventurous, even doing deposits like Raisin's doing with aggregation, and plug it into APIs. And then on top of that, you build a platform that can put all of this together, and it builds this wonderfully diversified portfolio that you can't just get out of, say, ETFs, even though ETFs are an incredibly accessible and efficient way to get diversification. So I definitely think there's an opportunity there. And again, a lot of the crowd-based products, the ones that are touching different corners of Europe, they're coming out from this part of the world.
Well, thank you very much. That was super interesting. And I hope to see you once again in Lithuania, because I think you see the possibilities here to do something with our ecosystem and to bring here new ideas and new products maybe. So thank you very much, Elliott.
Oh, thank you all for having me. It was a pleasure.
Applauses.
Thank you.
Thank you.
Thank you.